Hello, future homeowners. Stephen Mead here with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. This is our first time homebuyer, Southern California market update for very lucky Friday the 13th, November 13th, 2020. Anyhow, just wanted to kind of go over a couple things. And before we start, have a little bit of a special treat. I normally don't do this, but I think in this case, because the house is particularly great for first-time homebuyers, I thought I would do this. We currently have a listing in San Diego, in North San Diego County, in the community of Vista. This is not an area that we normally work. However, this house is owned by my brother. So I'll show you a couple pictures. It's actually really a great house, and I think it's perfect for first-time home buyers. It works out at 5% down. The payment ends up being sort of in that 3,000 to 3,200, depending on how you do the mortgage insurance, with just 5% down. So that's really kind of a great deal. It's much better than renting. I think it doesn't require a huge down payment. So I'm going to pop that up real quick. This is one of those houses that actually sits in that quintessential, like one of the lower priced, smaller homes in a really great neighborhood. It's perched well above the street. It kind of has a sort of majestic quality. It's been remodeled inside, new flooring, nice big living room with fireplace. Kitchen has been remodeled. Has a really cool backyard too. You can kind of see it out here. Anyhow, just thought I would share that before we started. One other thing I want to talk about this week is, inventory is very local, and we've added a chart this week to kind of talk about whole market inventory. And I'll go through that, but just remember, if you're looking for something particular, right? If you're looking in an area, let's use an example, San Fernando Valley, and you would like a pool home, and you're looking to spend over $700,000, that's a fairly specific market. So you might find that inventory one week might be 20 houses, and the next week it might be 15 houses are active. That is a 25% drop in inventory that will absolutely sort of affect that market. But as a whole, the market might not move that much. You see much bigger effects the more specific you are in what you're looking for. Anyhow, without further ado, let me go ahead and start up with our charts this week. And we're going to start with our pricing chart. And if you look, whenever I look at this, I think what's kind of interesting to me and why we do these on the same charts is we want to sort of compare how that entry-level housing market and how the condo market are doing, not just how both are doing in general. And if you look here, our blue line is our entry-level home. So what we did is we looked at 3-bedroom, 2 baths, and these are in Los Angeles and Orange counties, and we took our first quartile result. So basically what we're looking at is that 25% level in price. And if you look, almost everybody, you see kind of this sort of very gentle growth over the last couple months. Our condo market, that kind of has ebbed and flowed a little bit more, but it's overall been a little flatter looking. This week we're actually down a little bit, but it's important to remember that these are closed prices. So that means these are deals that were negotiated over a month ago or the beginning of October, if we're looking at sort of what sort of equates to these. And what's interesting about that is we had a little bit of a drop, and I'm going to show you a graph of sort of where we were. This is going to play into our new graph this week, but I don't want to spoil the surprise. Continuing on, if we look at our total monthly payment, rates rose slightly on average. I think they were down a little bit today, but because of that drop, we've seen maybe a $50 difference in our payment across, and maybe a $10 difference in our payment on the condos. Again, I think the real important lesson of these is, looking back at where we were, we are priced less than we were 2.5 years ago. I feel like that really means that, in effect, while the prices might be up, payments are actually down on houses, and it really is a great time for people who are thinking about sort of jumping on that carousel of homeownership. And a little saying that I'm fond of, and I think a lot of real estate brokers don't like to do this. The reality is, this is the way the housing market works. The carousel goes round and round, and the horses go up and down. The only time that you're really in a bad spot is when you hop off the carousel. So, as long as you remain on the carousel in the long run, you're fine. And I think that's really the key to homeownership, is putting yourself in a position where you're able to be in that position in the long run. So that doesn't even necessarily mean you have to live in that house in the long run, but it means that you'll have the ability to rent it out, say if maybe it's not a good time to sell. Anyhow, let me jump back in here. I know this has always been one of my favorites, is sort of this minimum income chart, because I think this really gives people an idea of how much money do you need to buy with 5% down and no other debts for these houses. And we see we are at an 86, about $87,000, just shy of that. Excuse me, for our single family home, and just about $65,000 for our entry level 2-bedroom, 2-bath condo. Really, when you think about it, these are great numbers. These are accessible to large portions of the populations that live in Orange County and LA County. So definitely good. Obviously, if you have student loan debt or car loans or other things, that does increase the amount of income that's required to qualify for these, but we wanted to just sort of create like a baseline here. This one is, and now we're going to talk about our availability of housing, because I think that, this year, I think what people are talking about a lot more than the prices of housing is really the availability of housing, that there's not a lot of listings out there, that there's a lot of competition, and really what does that look like and why? And this is why we introduced, a new chart this year. So if you go ahead and you look at this, you can see something really interesting, and that's like condos and single family homes don't always move together. While the trends kind of look similar here, because there's a lot of things that maybe affect these. This past week we saw our absorption rate drop for single family homes, and if you've noticed, it seems like it might be slightly easier in some markets. That's probably why we're seeing that there is a good healthy amount of new listings coming into the market, and buyers have eased off slightly. Anything above an 80% is still a very competitive market. It's just no longer a hyper competitive market, which is that sort of 90% plus market is a hyper competitive market. If you look though, our condos, actually that market increased in strength a little bit. And for once, there's a couple points you can see that these weren't too far apart. That's happening. And now we have our new chart. And it's really simple, easy to explain. This is just total inventory. What we mean by that is this is just active houses. So in Los Angeles and Orange counties, how many 3-bedroom, 2-bath, single family homes are active? Well, in this market we see, if we look across time, we were close to, 1,800. Now, this chart might exaggerate these changes a little bit. You'll see it starts at 1,500, it goes to 2,000. So these swings are only about 100, 150 houses, or maybe roughly a 10% change in inventory between here and here. But what's fascinating is if you look at this chart, right, we saw that, inventory had a bit of a peak sort of in this early October market for our single family homes. And if you go back to our first chart here, well, where are we? These homes, that this little bit of softness in price, guess what? These are the homes where people were negotiating in that early part of October. So if we swing back here, you can kind of see over time, one of the other things you note is just how stable that condo market is. Whereas it looks like the single family home market is kind of subject to these periods where a bunch of homes come on the market and then they all get bought up and they end up down here in a trough with low inventory. Both of our markets are kind of heading into a period of lower inventory in terms of number of active houses. Now, what's interesting is I also like to look at this, if this graph is just showing you how many houses there are, this one gives you a reference based on how fast are homes going into escrow, what's the speed of the market, and we can calculate a week's supply of homes. So if you look for our entry-level homes, that actually jumped. Inventory did get a little bit better in terms of weeks of home. And again, that is because the number of new homes in the market in the past week was pretty decent, and the number of escrows actually dropped a little bit. But if you look over here on our entry-level condos, we see the opposite. Weeks of inventory actually has started to go down a little bit. Not a huge change, but just a little bit. Anyhow, we're going to actually put up a link if you would like to see that house or see more about that house we mentioned at the beginning of the video, we're going to have a link in the description if you're on YouTube or in the comments on Facebook. Also, if you would like to see it, we have an automated system for scheduling some showings this weekend. So we're going to go ahead and put that up there as well in either the description on YouTube or the comments if you're watching this on Facebook. Do not forget to like, subscribe, and hit that notification bell. Obviously, we'd love to hear your comments and suggestions. We'd love even more if you decide to work with us. If you would like a short 15-minute introductory call, we are happy to do that with you via Zoom as well. No cost or obligation. Anyhow, we will see you next Monday, or next Tuesday rather, for our whole market update. Again, this was our first time home buyer specific market update. Anyhow, stay at it. Don't give up. Homeownership is worth it. We will see you next week.